Hey, Rockstars, Andrew Houston here with another No Bullshit podcast for contractors. Look, one of the biggest challenges that we have in today's industry is that the cost of living, the cost of everything is going up. So this is part of a three-part series. We talked about break-even margin in part one. We talked about how to use the right calculation to get the right profit margin in the previous one. And in this one, we're going to talk about how do we adjust for these additional expenses. We've got thousands of contractors that we work with, and they're all affected by the cost of living, the cost of materials going up, the cost of their mortgage going up. And if we don't adjust for these changes, this change in this environment from a pricing perspective, from a break-even perspective, the person that's going to have to absorb those extra costs is you. So let's put the right profits in the right pocket, be in your pocket. I'll see you on this podcast, see you on the flip side, and let's get into this. Let's make sure that you're able to adjust for profitability. I'll see you soon. Until right now, this very moment, contractors have always been on their own, not as tradespeople, but being alone and knowing how to take their business to the next level. They call us working class. They call us blue collar. They say that we don't have the smarts to become the business owner that we're meant to be. That is such bullshit. You have the ability. You're more than any of that. The question really is, where do you get the insights that you need specific to contracting to systemize your business so you can get your profits to pay for your freedom? I'm Andrew Houston. I'm going to show you how to make more profits, how to get more control, how to get more freedom in the simplest, quickest way possible without any of that bullshit. Welcome to the No Bullshit podcast for contractors. Listen up, level up, and if you learn something, like the video, subscribe to the channel, change your business, change your life. All right, Rockstars, welcome back to another No Bullshit podcast for contractors. I'm super excited about this one. This is an episode that, just like the previous two, but this one included, affects every single contractor out there. Okay, if you're not adjusting for the changes in the market conditions from an expense perspective, you're the one that's going to have to absorb those expenses, those additional costs, and that means profit out of your pocket. And we got to stop that from happening, right? So I'm going to go through this fairly quickly. It's leveraging the very first part one of the series where we talked about break-even margin. And, if you want to go back to that, that's awesome. Okay. But I'm going to go through this relatively quickly. Shouldn't be more than 10, 15 minute podcast here, but it's critical to your business. Okay. And we're going to talk about how you can use this for, forecasting your break-even margin and adjusting your pricing, how you can use this from a budgetary perspective, and a lot more. Okay, so let's get right into this. So I'm going to use the example of time. Okay, so let's say that we've got 2020 going back in time, we got 2021, we got 2022. And what changed over that period of time? The cost of things changed over that period of time in every aspect, from interest rates, the cost of homes, the cost of material, the cost of labor, how much you got to pay your guys. Everything, the cost of the gas, everything went up. So if you have not increased your pricing, and if you haven't done it in a mathematical, calculated way, then you're guessing. And guessing is one of the biggest risks that you can take. Let's take the guessing out of it once and for all, okay? I'm going to use this example, apply it to your business. Maybe you got to have a chat. Maybe your bookkeeper or accountant has to watch this. You got to apply this to yourself if you're pricing jobs. Either you're doing it, or your team's doing it, or both are quoting jobs. You got to be aware of this. All right. So going back to the very first video, part one, we talked about break-even margin. Just to reiterate what that formula is, it's fixed cost divided by your sales. Okay, that's it. Not complicated. Take my word for it. It's fixed cost divided by sales. And just to explain a little bit about that, think about it. You've got all these fixed expenses, right? Cost of a lease, the overhead, all these different expenses. Okay. With those going up, you have to account for how much that's going up against as a percentage of your sales. Okay. So in this example, 2020, let's just say that our fixed expenses, fixed costs was $250,000. This goes back to the same original example I gave you guys. $250,000 in fixed expenses divided by $1 million in sales, which gave us a break-even margin of 25%. That means that every job that we quote, we've got to put 25% margin, okay, not markup, margin and I showed you how to do that in the previous part 2 of the series. You got to put 25% margin on every job that you do. Okay. So if we, as an example, had a job that was $1,000, going back to the previous calculation, we take $1,000. It's basically cost divided by, in brackets, 1 minus our break-even margin, or the margin that we need to apply. So that'd be basically just simple math. Let's say it was $1,000 job, as far as cost of labor and material, and we want to make sure we account for our break even. This isn't ensuring that we've put anything on it as far as making anything. This is just making sure we're covering our break even, our overhead expenses, okay, what have you. $1,000 job, okay, it would be 1,000 divided by 0.75. Okay. We would have to, on $1,000 job, we'd have to put $333.33 on that job just to cover the cost of running our business based upon our fixed expenses as a percentage of sales. Okay. So just take that into account, right? If you didn't apply that, you'd be forking out $333, right? Out of your pocket, and you wouldn't be covering the expense of running your business. Okay. So let's get back to forecasting here. Let's get back to, like, how do we adjust? Well, let's say in 2021, our fixed expenses went up by 20%. Okay. And that's very, like, if you look at it, some places it could be higher, some places it could be lower, but that's pretty reasonable as far as, how much things went up in 2020, from 2020 to 2021. So 20% higher. So from $250,000 to $300,000 in fixed expenses. Instead of our margin, break-even margin being 25%, it's now 30%. Okay. Now all of a sudden it's 2022. Things go up again. Okay. Let's just say goes up, by the end of this year by 20%. The original was $250,000 in fixed expenses. But we're not getting anything more for this, right? Like, what if our leases went up, we're not like getting a nicer vehicle, right? We're not getting like better quality hydro. We're not getting better quality cell coverage. I mean, we're getting the same thing. We're having to pay more. Okay. So we got to pass these prices on to our customers. Okay. We have to account for this. So we went up, 20% more. That's another $60,000. Okay. So, from 2020 to 2022, these fixed expenses went up, easily. Right here, you can see it from 250 to 360 went up $110,000. And like I said, you didn't get anything more for it, but you had to pay for it. Okay. So we got to make sure we pass this on to our clients. Got to make sure we pass this on to whoever's quoting jobs, right, to account for this. So 25%, it was a break-even margin in 2020, 30% break-even margin for 2021. In 2022, 36% break-even margin. So if you look at this, right, you can now apply this to your business, guys. Okay. So this is from, 1 year to the next year to the next year. One of the great ways to apply your break-even margin, I would highly recommend, and what we recommend for our clients or champion CEOs, is at a minimum every single quarter, you should reflect on what your fixed expenses were. Okay. And account for any changes in increase in those expenses. Because if you don't do that, guys, team, the difference between this 250,000 and the 360,000 is a 40% difference. Okay, 40% difference. If you have not adjusted this, and if you're this contractor and you didn't adjust your pricing from 2020 and it's 2022, you're having to fork out an additional 40% out of your own pocket because you didn't adjust for the times. Okay. So bare minimum, you have to consistently adjust dependent upon the market conditions. Okay. Or the environmental conditions, however you want to describe that. Okay. But if you don't do it on a regular basis, it's you, the contractor, the owner, that's going to be missing out on this money. Okay. And that's absolutely, that's absolutely devastating. Okay. You think about that means more cash that you're going to have to fork out. And again, I can't reiterate this. The costs of things have gone up without us getting anything more. Okay. It's one thing if you got to, pay more to get more, but you're having to pay for these expenses, and you're having to absorb it. That's not how you run a business. Okay, that's not how you become a champion CEO. You need to know your numbers. You need to adjust your pricing. You need to adjust the way that you go about your business, and how what you charge for things based upon how things change. And the more frequent that you can adjust these things, the more real time that you're going to be able to cover those additional expenses. Okay. So I would highly recommend, today's podcast, again, use the profit plan calculator. It's a great tool for you guys to get your hands on. It goes through how to calculate your break even margin, goes through how to use, margin versus markup, all these different things. So you want to definitely get your hands on this tool. Okay. Let's say we're looking at this from a budgetary perspective. Okay. So let's just take this to the next level. Let's say, for example, that we're predicting that, in the coming, say the coming year, that we can see that our sales are going to go up exponentially. Well, if our sales goes up exponentially, we can adjust based upon this formula for those additional sales. If we see that we can project that if these sales go up, not at the same percentage, is our fixed cost going to go up? That allows us to be a lot more competitive. So you can see how you can use this to set budgets, to say, hey guys, we need to set the sales target of X, okay, for 2023, because we know that there's a pretty good chance that we're, based upon these new customers that we got, based upon our new marketing, based upon, how we're generating leads, and based upon how we've trained our sales team and all the rest of that, that we're projecting that our sales are going to go up. So you can then adjust the data that goes into this formula to give you a more accurate break-even margin. And that break-even margin, if in this case we were fortunate enough to actually increase sales, let's say we were able to increase sales here, from 1 million to 1.2 million, and not have to increase our fixed expenses because we become more efficient. We negotiated better pricing. We got rid of certain expenses that we didn't need, or certain people that we didn't need, because we became more efficient. Like, think about this for a second. A company that goes from 1 million to 1.2 million is now able to quote jobs. Get ready for this. Instead of 36%, they're able to quote jobs at using a break-even margin of 30%. Guys, that could be the difference of you landing a job or not. A difference of 36% break-even margin versus 30%. So use data to drive decisions. Okay. So use data to drive decisions, like the 3 Ds, I call it. Okay. And, this is a perfect time of year for you to be thinking about what 2023 is going to be bringing you. Okay. Look back at the numbers. Okay. Look back at the previous years. You definitely want to compare your profit and loss statement, minimum profit and loss statement, let alone your balance sheet. But let's just say your P&L. Compare your P&L, from 2020 to 2021 to where you're at in 2022, and start making better decisions, right? Start looking at how you can be more competitive. Start looking at, how you have to adjust your pricing if the expenses have gone up, okay? And how you're going to move forward with that, so that you're adjusting your game so that you can maximize how much you win. I often look at running a business like, as if I was coaching a team. I used to coach soccer for my kids and hockey for my kids, and looking at that scoreboard all the time, like let's say it was just hockey, looking at that scoreboard all the time, looking at how many penalties we had, looking at who's in the penalty box, looking at, the stats of the competition. It allowed us to make changes while we were playing the game. Okay. And the more that we could make those decisions based upon data that we had, the higher the chance that we had of winning the game. It's the same in business. Okay. And knowing your numbers, knowing your data, making the decisions instead of gut and feel and like emotion, make them more on logic is going to allow you to be more profitable. It's inevitable, okay? If I'm coaching a company and they're using this data to make decisions and they're going up against a company that's not using data to make decisions, I'm going to tell you right now, they're going to win all the time, okay? It might not mean that they win all the jobs, but they win the jobs that are profitable. They win the right jobs, right? They win with the right clients. They win with the right strategy. They win with the right data. So I hope you guys enjoyed this 3-part series of how to price your jobs profitably, how to forecast, how to adjust your pricing, how to make sure that you're adjusting for the current market conditions and what's going on in the world and everywhere. Prices are going up, and look, we've got to make sure that we're constantly adjusting the dials in the cockpit, making sure we're going in the right direction. Hope you guys enjoyed this. If you want to get your hands on the pricing for profits calculator, handout, just click on the link below and we'll get that out to you. Okay. Be a better business owner by doing things better and doing the right things. Okay. So I'm Andrew Houston from Profit for Contractors. Hope you enjoyed this no bullshit podcast. And guess what? I'll see you on the flip. Ciao. Hey, rock stars. Thank you for watching the No Bullshit Podcast for Contractors. If you enjoyed this episode, hit the subscribe button. And if you're serious about growing and need help, click on the link below. Myself and my team would love to help and give you the necessary tools so you can take your contracting business to the next level. And remember, dominate, delegate, and deliver.